plan and also in the light of Tuesday's recent rate cut. We want to look now at, again, at the housing market. Will it help the housing market pick up? Our next guest says the surprise Fed rate cut could have an immediate impact, at least on sentiment in the marketplace. And with rates heading back to the low levels of 2004, he says he's already seen an immediate pickup in traffic in the Chicago market. Matt Garrison is managing director of the Matt Garrison Group, a full-service marketing team within Coldwell Banker. He joins us from our Chicago bureau. Matt, welcome.
How are you, Kathleen?
Well, I love hearing this because people always say, oh, Fed rate monetary policy works slowly, it takes 6 to 12 months to work its way through. But in this day of age of technology and the mortgage market, it seems like things can work much faster. Is that what you're seeing?
We're definitely seeing that, and I think it's also, just a huge effect on consumer sentiment. And, the reason some of these existing home sales numbers are down is that people are staying out of the market. And I talk to buyers every day. They're, Matt, when should I jump into the market? When should I jump into the market? And we're looking for a strong resurgence in the spring here, just based on my own clients and people I talk to every day.
Well, Matt, what about credit availability, mortgage availability? Because we've heard so much about the drying up of the subprime part of the market. Larry Yoon from the National Association of Realtors saying that's one reason why home sales have slowed down so much. But it seems like you're also saying that quite apart from that small part of the market, there's a much bigger pool of people out there who are credit worthy, can get a mortgage if they want.
Yeah, there's a lot of prime borrowers out there right now that have just been sitting out. They've been sitting on the sidelines, cash on the sidelines, waiting to jump in. And when the sentiment changes, they're going to jump in, and I think they're going to jump in strong. So we've come down a long way from 7 million to 5 million, and now we're a tick below 5 million. But I'm looking for it to pick up soon. And the best barometer I have is my cell phone and how much it rings, and it's been ringing a lot in the last few weeks.
Okay, but so it was been ringing more even before the Fed moved?
Even before the Fed move, we were seeing it ring a lot. I think a lot of people sat out the fourth quarter, but the fact is people need to buy. People need to trade up to larger homes that have children. People want to have bigger homes, and in some cases, baby boomers who want to downsize. And, you have a quarter of people sitting out of fear, and as that fear starts to ebb a little bit, which is definitely helped by the Fed rate cut, we're already seeing it. We were seeing it before the surprise cut the other day, and I think we're going to continue to see it.
What about the problem of falling home prices, though? Because I may want to trade up, and now houses are getting more affordable for me that I may have had, been sort of coveting for a long time, but now my home price might be slipping too.
Well, that's actually a great position to be in, because if you're trading up, and maybe you take a small loss on an existing home, you're going to get even a better deal on the more expensive home that you're trading up to. So I view that as an arbitrage opportunity.
Okay, we love to hear about arbitrage. What about the labor market? Because, mortgage rates are very important, but many housing authorities say that it's really jobs. If the economy's growing and I have a job and I'm confident, I will buy a house. And if I don't care how low prices get or mortgage rates get, I'm not going to make the move. So what are you seeing in the Chicago area on that front?
I mean, in terms of jobs in Chicago, they've been really stable. 100% of my buyers are employed, and all the people I talk to are employed. I sold 700 condos in 2006. Last year, about 450 or 500. And I talk to those clients all the time. So I have a captive pool of really a couple thousand clients that I'm in contact with. I haven't heard a whole lot about people staying out of the market or not buying a larger home because of a loss of a job.
Matt, it looks like as part of this stimulus package, Fannie and Freddie will be able to buy bigger loans. The jumbos have been capped at $417,000. We're hearing about something north of $600,000. What difference does that make in the market?
Well, it makes a phenomenal difference. I have a buyer I'm dealing with right now. He's looking for an $800,000 condo in the core downtown area. With jumbo rates a little higher since August, it's kept people out of that market. This guy's going to be able to come in with his equity now with the conforming loan with these super low rates. It makes it incredibly affordable for him, and it'll put that guy over the top. He will buy a condo now.
Where is the market strongest in your region? Where is it weakest?
My specialty is in the core downtown area. The market's strong in the core downtown area. I think we're actually up on prices on most of our categories year over year in the immediate area surrounding the central business district. In terms of weak areas, I mean, in some cases it's block by block. There's neighborhoods in downtown Chicago that are hotter than they've ever been. I recently sold a condo without putting it on the market, 3 backup offers in the $1.5 million to $2 million range. There's people lined up to buy it. If we could build another building like it, we could sell the whole building out.
Wow.
That's the reason they're lined up. We can't build another building like it. The land's not available. The zoning's restrictive. And it's a supply and demand issue when you get to the core urban downtown area.
Does this have something to do with the weak dollar? Certainly in Manhattan, there's a lot of demand from overseas buyers. The dollar's weak. You have the gazillionaires from overseas who see bargains. They want to hop in and buy. Is that a factor in Chicago?
I've personally sold 32 condos to overseas buyers in the fourth quarter. So we're seeing it have a huge impact. This real estate is dirt cheap to them over here. They're coming over here in droves. In Chicago, we're seeing a lot of Irish buyers. We're seeing people from the UK, some people from the Middle East. On my development projects, it's become a part of my marketing plan, and we're going to get really aggressive with it in the next couple quarters here. I think that'll go a long way to cleaning up some of the excess inventory and really, getting the market squared away.
Very interesting. A lot of people are worried about a falling dollar, but just another example of how the decline in the dollar can really help the U.S. economy more broadly. Matt Garrison, thank you so much for joining us. Appreciate your insights. Now let's get back to capital.